Hello, fellow traders. Marv Eisen here from Timeless Dollar Trading Academy. I hope you're having a great holiday weekend. 4th of July, always a fantastic time of year. At least it is for me. And one of the reasons is one of the best trades on any pre-holiday is that the traders, especially on holidays where they come just before a weekend, traders are happy, they're in a good mood, and very often the market rises. Now, nothing in the market is true 100% of the time, but just as in the gap trade, which closes 70 to 75% of the time, the holiday trade rises up at least 75% of the time. So trading to the upside is always a pretty good bet on pre-holiday weekends. I'm going to go into that a little later in this video. So I want to take us back to just before Donald Trump was elected, and the election was held right over here, November 5th. The election was held. The market was generally in a good mood. Then President Trump announced his tariffs, and the market tanked. The market tanked. Why? Because economists know tariffs increase prices for everybody. And although President Trump was telling us otherwise, anyone with some sense of the economy and how things work know that tariffs increase the cost to producers, increase the cost to retailers, to wholesalers, and ultimately those costs are passed on to consumers. And so at a certain point in time, President Trump, he is a proponent of watching the stock market, and he saw what was going on, and so he announced, I'm going to postpone the tariffs. So tariffs were postponed, 90-day postponement, and then we come up to the 4th of July, the big, beautiful bill. And so the stock market basically has roared back, basically hit an all-time high, closing at 62.79. This is the S&P, not the E-mini. This is the actual S&P. And so now we've gone from the election to the announcement of tariffs, to the postponement of tariffs, to the big, beautiful bill. And the market is at an all-time high. So what about these people who bought right over here, right at the top? Well, they have to sell to somebody who's going to buy it for a higher price than them, right? And so it's pretty tricky to buy at the top of the market. Typically, people look for a pullback. But are we looking at a pullback, or are we looking at a beginning of a collapse of the market? And I know you might say, Marv, that doesn't sound right. A market collapse would take the market down drastically, and yes, it would. And we have a number of gaps. And so we have a gap over here, just over here at the beginning of July. We have a huge gap here in May, middle of May, and on and on and on. We have several other gaps to negotiate. Gaps always close. And so from the big, beautiful bill, and that's where we are now, we have to take a look at signs of which way the economy is going. And something very interesting happened last week in the economic calendar. In the economic calendar, the U.S. employment report for June was announced at 8:30 on July 3rd, and the announcement was 147,000 new jobs added. The forecast was 110,000 new jobs. Okay, you see this over here? 110,000 forecast, 147,000 new jobs added, according to the U.S. Labor Department. There's something very strange and odd about this number, because it comes on the heels, just the day before, of the ADP employment report, where the forecast was for 100,000 jobs added, and actually the ADP employment report showed 33,000 jobs were lost in the economy. So this is a head scratcher. 33,000 jobs were lost, and ADP is the payroll company that services so many employers, and it showed that 33,000 actual fewer people were paid. And so the U.S. Labor Department, which is a division of the United States government, showed a drastic increase over the forecast. Something isn't right, my friends. Something isn't right. And so I'm going to take you forward again to the stock market business report after the 4th of July holiday and look at this announcement. Treasury Secretary Bessent, tariffs will boomerang back to April levels by August 1st for countries without deals. Remember what I said, what happened when President Trump announced tariffs. Look at this. And because the market tanked and President Trump saw what was going on, and he quickly reversed course, postponed the tariffs. Now, according to Treasury Secretary Bessent, tariffs are going back on. So if you were one of the guys who bought right over here at the top of the market, maybe you'd be scratching your head thinking, who's going to buy my shares? I mean, I've got to sell. I bought because I believe the economy is going to rise. And so let's look at what happened in the S&P E-mini over the past couple of days. And here is the E-mini market Wednesday, July 2nd, and the market was opening. Here's my Taylor trading zone right over here. Resistance 62.75, support at 62.35. And this was the trading range calculated with my Taylor trading calculator. Okay, and here it is on the numbers for Wednesday, July 2nd, 62.75 resistance, 62.36 support. And that's what we see on the chart. We go back to the chart. Okay, and so where did prices go? Well, one of the things that I've been talking about with the Taylor Trading Zone is that, number one, it's particularly accurate as to range, and number two, we can basically wait until we find a really good trading entry before we make a trade. And if we don't see the entry, maybe we don't trade at all that day. Remember, most traders, they only are successful. Their whole month is made on maybe 2 days for the month, because if they're making money a few days, losing money a few days, they're basically treading water, right? And so if we use the trading zone to give us an indication of where the market is beginning, where our entry is, and where the market is likely to go, and we use the trading zone's range, which is particularly accurate, we can basically make a trade and ride it up to the top of the candle or down to the bottom of the candle. And so I'm going to take you through how the market went on Wednesday, July 2nd, and let me start the action. And here's where the market opened up, right toward the lower part of our trading zone. Okay, I'm going to stop it there. But in the lower part of the trading zone, quickly close the gap, but we have 38 points in the range. And so where did the market go? Well, if we wait till about 10 o'clock, there we go. We see that the market has tested and taken out the previous high. So the market is likely to trade up through the trading zone. I mean, the trading zone is forecasting a high up here at 26.75, at 62.75. And so we take a trade there. And we wait, and we wait, and we wait. Maybe we just step away from our screen a little bit. Maybe we set a stop loss, but we wait because the entry was particularly good, and we see where the market is going to go, and we're looking for it to fill that 38 point range. And so where did the market trade for Wednesday, July 2nd? Okay. Simple, right? Wait till we see a good opening relative to the trading zone. Wait till we see, wait until the market takes out either the high or the low during the first half hour or hour of the day. Use our trading zone range to give us a good indication of where the market is going to go and make our trade. And that's the trade. This is a perfect day and an excellent example of the best way to use the Taylor trading range. And so I'm going to take you through the next day. And on July 3rd, the market opened above resistance. Remember, I said that on holidays, pre-holidays, particularly when a holiday is falling just prior to a weekend, not midweek, but giving the traders not only a good mood because of the holiday, but also a long weekend. And so a long holiday weekend, traders in a good mood, drives the market up. It's exactly what happened. And the trading zone, if we wanted to transpose it to see where the market is going to go, we clone it and we clone it up to the the open, okay? And there it is. The market took out the intraday high at about a half an hour after the market opened, and we can take our trade, ride it up the rest of the way. Closed exactly where the trading zone said it was going to close. And another good day. We can take this indication of a happy day because the traders are in a good mood, the market rising, and using the trading zone to give us an indication of where the market is going to go to the other end of the day's candle. Oh, and by the way, remember I said who's going to buy the shares of the guys who bought way up over here, okay? Way up over here, nosebleed territory. Well, look what happened after the day closed, after the market closed. Market closed early, 1 p.m. on Wednesday, July 3rd. Look what happened, okay? Right over here, 62.83, and just about at our resistance of the trading zone at 62.86, and that's it. Who's going to buy the shares of for these guys who bought at the top right over here? Remember, things are a little bit suspect, particularly with this ADP report conflicting with the U.S. unemployment report. I'm not so sure I believe the U.S. unemployment report, particularly with Donald Trump as president. You all remember what happened in his Atlantic City Resorts casino stock, all right? Stockholders took a terrible bath. All the while he was pumping up the stock. It's doing great. We're making money. The company was losing money hand over fist. He converted his equity to stock and bonds, and the bondholders and the shareholders, they took a bath. They lost. So I'm not believing this U.S. employment report. I am believing the ADP report. And so I'm not so sure that for long-term traders, this is a good time to buy long. At the same time, as day traders, we have to see each day as it is and take it day by day. So that's my video for today. A little long-winded, but I wanted to give you a sense of what I thought the market was going to do. And I've taken you from the election, November 5th, up to the big, beautiful bill on July 4th, taking you from the dichotomy between the U.S. Labor Department and the ADP employment report, taking a look at the nosebleed that the market put in on July 3rd, and how it settled back slowly on post-market, after-market. So that's my video again for today. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.